Hello, folks, and welcome back to another edition of Money in Motion. Starting off Monday, excited to go over a lot of new data and basically talk about how everyone thinks this week is 1987, Black Monday. I'll say the charts look similar, but everybody's looking at them. So, and obviously, Monte
Yeah,
and I were talking about this. Like history rhymes, but it never happens the same way.
exactly. Yeah, it rhymes, but it doesn't repeat itself. Like we may end up at the same place, but the path to get there won't be the same because once everyone starts looking at it, then it's like it reminds me of like the time travel paradox. Like if you change anything, you know, then you mess up the future. I feel like if too many people are expecting it to be like 1987, then it's not going to be like 1987 because they're all expecting it. So
Wait, how does that relate to time traveling? I kind of lost you there.
it was a bit of a stretch, but like if I don't know. I don't know. Anyways, I just think that with like you said, history rhymes and it definitely does repeat itself, but I don't think that it's going to be exactly the same, and I'll get into why. But you're right. I mean, everyone's talking about how this week is going to be massive sell pressure. We're going to see, new lows in, in a lot of these equities and finally see them start to break down. It's a pretty bold prediction to make on a Monday morning without much price action to back it up. We'll see what we get. You never really know with the equity markets, but yeah, if there's anything you'd like to start with, please go ahead and do so, my friend.
There's a lot to cover today. I'm still breaking out some charts and still
Yeah.
getting some stuff
Okay.
ready, but why don't we cover the DXY to start, because I think that's very important, and there was a massive shift in positioning.
There absolutely was. Yeah. I saw that in your weekly futures report, and the DXY, man, that thing is just continuing to rip higher, which if you're a bull, not great news.
You see
But
this all right?
yeah,
All right, cool.
what do you make of this massive shift in positioning? Because really we don't see this that often, like this significant of a position change.
No, and I think this goes along with what we've been seeing in TLT. TLT has been crashing. And if we're looking for rates or expecting rates to stay higher for longer, which I think the market kind of realized after last week's FOMC, then the dollar should go higher. And I think that's why speculators were in such a rush to buy it last week. And we continue to see that momentum go up. So this is nowhere really near max crowded positioning yet, but it would be enough for me to take off any dollar longs if I had them on. And then if you look at like the commercial movement index, this has actually been one of the largest swings downward in terms of selling of commercials since about I would say since about 4 years ago, or even anyways. The point is that I'm not going to short the dollar straight away here. One, because it's not aligned from a positioning perspective, and two, these speculators can always get much longer. Typically, like a healthy buildup of speculators would be like a gradual climb like this. When you have a massive shift in 1 week, we've just seen like the opposite happen in certain instances. Like that's what we've seen happen with the New Zealand dollar as well as Australian dollar. Like that's very, very pronounced positioning. I think if we look at, Australian dollar, we're actually commercials are the longest they've been, I think, since this contract has existed, or at least since 2021 when the dollar was crashing. So if the dollar is to reverse here after that massive shift in positioning, I think one of the best plays in terms of the FX market is kind of Australian dollar or New Zealand dollar, but I'm not going after those just yet because of there was a similar period of time a few years ago where Australian dollar got to max positioning and New Zealand dollar got to max positioning like that. Price went up a little bit, but it took a couple more months for the market to actually fully top, or the dollar to top. So ultimately we'll see, but the rising dollar also has other implications on other commodities like softs, which I really want to talk about because I have positions in there. I know probably not a lot of you guys trade those, but I'm going to go over them anyways because I want to. But Monte, I would like to give the opportunity to pass things to you. We'll also talk about Ethereum a lot.
Yeah, no. That was a really nice breakdown. Thank you for that. And I actually wanted to toss a question your way regarding the DXY. And maybe this will lead into your analysis of the softs. If you want to just, segue into that, that's fine with me. Or if you want to talk about equities. But really what I want to ask you is, we've talked so much about the DXY as being a gauge for risk for the equity markets, right? When the DXY is going up, we tend to see the equity markets going down and vice versa. Do you think that's still going to be the case if the equity markets or if we see the DXY pull back? Or do you think that um, that because it's like a positioning based pullback, we may not see that same sort of inverse correlation? What are your thoughts on if we do get a DXY pullback based on that COT data? What does that mean for equities?
Yeah, I mean, I think you probably would see a squeeze higher in equities. I don't know. I don't know if that would lead to like equities making a new high, but I would expect that inverse correlation to remain in the short term. The reason why people are buying dollar, the short covering is pretty much over in the dollar. Positioning is firmly back to neutral, and this is the first week that speculators really bought aggressively because people expect rates to remain higher now. In terms of equities, though, if we pull off in the dollar a little bit, yeah, I think given the extreme positioning, look, it's like a critical breakdown point for the Bears. Either the Bears step up, we break this critical level, and we get a big breakdown and continuation of fear and panic, or we get a little short squeeze here, make another lower high, and maybe we can continue the downtrend or break higher. Like those are basically the 3 to 4 situations I see happening. So yeah, I didn't really answer that very directly, did I?
No, you did, and I agree with you. Like, I think that the inverse correlation is still intact with the DXY and equities, and if we see the DXY continue to rip higher, it's going to be very tough for the equity markets and Bitcoin to get any sort of traction. That's just my opinion. Although we've seen in the past instances of like the DXY pumping and equities pumping, I don't think that this will be the case in this instance. Just because that COT data that you shared, CJ. I mean, obviously there's a high demand for the dollar, and like you said, I wouldn't start fading it yet. That could plausibly mean that we see continuation for quite some time before we actually get a reversal. And if that's the case, then I think we see the equity markets struggle to make new all-time highs, and the Bears are finally validated. But we shall see.
I think it's somewhat rare that markets get crowded and then break very quickly. Typically, they remain crowded for pretty long periods of time.
Yeah.
Like when I think about the dollar reversing here, I kind of just think about the heating oil and cocoa charts that just like have relentlessly gone up. And I'm not saying that has to happen, but anything can happen. That's why I'm kind of a little reluctant to answer the correlation trade in the dollar. It's like the one thing that I do know for certain is that nothing has to happen the way it's supposed to. That's the only constant is change.
Yeah, that's
All right,
very
let's
true.
go back to the softs. And I'll hit the equities very quickly, and then
Yeah,
Monty, I'll
you're
throw
getting
it
a
to you
little
for
fired up. It's Monday morning. It's gloomy here in Chicago. No, I'm kidding. I like the passion. It's good stuff. But yeah, what are you seeing in the softs? I know you've been watching sugar closely. What are you seeing here on this chart?
So the softs have done really well this year. They've had an unprecedented year because of fundamental reasons as well as just the dollar really being depressed. But now that the dollar has really had some strength, and if, like I said, if this is the macro top for equities, and I would define macro top by being saying that the high of equities in the S&P is in for the year of 2023, then if that is the case, it's probably the same being true for the softs, likely cocoa, likely sugar is another one. And then the other commodity that I've really been talking about a lot has been soybean oil futures. And this, like, from a trend following perspective, I'd really like to catch the turn of these if it happens. But as you can see, today's a very critical level or today we're at a very critical level for some of these assets like cocoa. I think there's very clear defined risk. I have, a short on this trade. If I go above, or if price goes above this gap fill level that we had around 3,600, then I have to kind of stop myself out or wait. Maybe we have another retest of the highs. We all know, I was shorting back here and I had to stop myself out. So a situation similar to that could continue, or we could finally get, the actual capitulation candle where you get a ton of positioning squeezed out. So similar thing is kind of true as of sugar and just the soft market in general. But we are going to have to see, there's a wide divergence from the moving average. But same thing, defined risk with a stop loss at today's high. And then really nothing to be said about this. The only thing I will say is that, from a trend following perspective, the indicators that I really like to use when looking at commodities and sometimes currencies, but really commodities because they have a tendency to trend a lot.
Right.
So now trend followers and commodities are no longer on the bullish side. Like, obviously not every trend follower in commodities is using the 1222 EMA, but they're probably using some type of variation of moving average crossover. So when you get the bearish cross in the trend followers are going to kick back in and they're going to be like, okay, it's time to flip back to being short. And the way that I like to look at confirmation for that is to see whether or not we're actually able to break above these downward sloping EMAs. The fact that we actually got a rejection today, I might be making the low tick on this. I don't know, but all I'm saying is that it's kind of what you would want to see if you're looking to do some trend following. I mean, the classic example is like what we saw the entire way down. It's like this level acted as resistance, and inversely support on the way up. So, we're seeing what we want from that so far. In terms of,
and just real quickly, full disclosure, I am in a position for soybean oil, and I owe that to you, CJ. You pointed out the bearish crossover that we got, and on the back of that, we got that retest of the moving average. It checked all the boxes of what you want to see for a typical trend reversal. A failure to break above the new highs. We moved up, touched the moving average, came back down. And I know you said you might be putting in the low tick today. I don't think so. I think that with the way that this chart is shaped up right now, and like you said, commodities tend to trend. I think that we see continuation to the downside. Again, full disclosure, I do have a position in this, so maybe I'm letting a little bit of bias seep into my analysis here. But I do think that this one's due for an extended period of downward price action. So just my thoughts on it.
Yeah, I mean, I'm half kidding when I say I put the low tick in. But if I go to our community, let me go a couple last week. This was the low tick. I put the low tick in on that one. So you never know, right? You never know.
Yeah, true. I want to talk briefly about Bitcoin and ETH. Not a whole lot to say, really, in terms of how they've been performing. I also want to talk about the crypto-related equities. I know that might be a tough thing to talk about given this current Bitcoin price action, but I went ahead and exited that long position that I talked about. Didn't get the continuation at all that I was looking for this weekend. Very, very low volume. You can see here, just like this. Look how low this volume was on Saturday. Like, you'd be hard pressed to find a day where we had less trading volume on any major exchange. Here, let me switch to Binance. See if it's, just incredibly low amounts of volume. And that is worth noting, right? Because volume is one of the few indicators that I give credence to as a leading indicator. And right now we're having kind of an uptick in sell pressure. And what this means to me, this volume increasing day after day, and we still have almost 10 hours left in today's daily candle, is that there actually is some spot selling occurring. It's not just shorts getting squeezed. which is a negative sign if you're a bull for Bitcoin right now. Now, I wouldn't necessarily go out and short Bitcoin. One thing I would do is certainly check the funding rates of all the major assets. You can go ahead and sort by funding rate, and the assets that, like, there's not too many that are really that crazy high. I mean, TRB, this one is just not even worth touching. That thing's a untamable horse. But for some of the rest of these things, like look at all these funding rates that are still negative. People, really trying to short these things. But that being said, like, if we're talking about this being the second highest shorted asset, like, that's not that high. It feels like we kind of got a reset of funding rates, and that tells me that it may be less risky to go ahead and enter some of the shorts. So we're seeing squeezing happening today. That's why much of the watch list is green, right? Shorts getting kind of squeezed out on the U.S. equity market open. However, I don't think that's going to last. There's a couple that we've been talking about as possible short plays. One that I still think is going to continue to grind down once the shorts kind of get squeezed out. This one still has a good amount of shorts in it, but it's actually showing some decent strength. Maybe don't touch this one for the time being, but Solana. One thing I will say is, like, because of the fact that massive unlock occurred and the tokens were bought immediately, that's actually a good sign for Solana. That, for me, just means that there actually is demand for Solana still, despite the fact that FTX nearly destroyed this token. It's not dead. Like, people bought it OTC. They bought all of FTX's Solana, and Solana will live to see another day. So if you're looking to short something, one area I would look in is like OG DeFi, because things like Maker put in this double top formation here, declining volume. Look at how weak this volume is. There's just no one stepping in. No one wants to step in at these levels, right? Funding rates are neutral for Maker. And I think that this one has a nice chance of continuing to the downside. And obviously you have clearly defined risk being, anything above the previous high here. I would cut it immediately. But that being said, I think that you have a nice downside target of around 1,000 for Maker if we see continued negative price action in the equity markets and Bitcoin. I think this will be one of the more profitable trades. So this is what I'm watching closely. And I haven't entered a short yet, but if we break down so basically I'll just go ahead and give you guys the insight. I talked about this with members of our community in Discord. So if you are a member, you probably sound like a broken record, but apologies for that. This is basically my trigger for entry right here. Right at about 1277, 1275 is what I put in the chat. Because that is right where that wick breaks down, basically. Or it's actually a little higher than that. It's more like 12, or lower than that. It's like 1260. Anything below that level, I think we see this. Look how quickly this candle came up. And also look at this distribution here. Those two things in conjunction, this distribution, no one wanted to buy here. And then we saw this here, which was a massive short squeeze. So there's really no resistance between here and here. And I think that we could see that move happen pretty quickly if we see Bitcoin reverse. So this is the one asset that I'm looking to short today. This would be your stop loss. This would be your trigger for entry. And then, consider taking profit here. Or if you're, feeling greedy, here, or plausibly even here. I wouldn't bet on it going below 1,000 anytime soon. I think 1,000 will hold up for the time being, but I think it is a nice round downside target, and something that, after a double top formation like this, is very much possible for Maker. So that's one that I'm going to be watching closely, possibly entering today. We shall see how it shakes out, but the volume is just telling me that no one's wanting to buy this thing near the high. So it seems like we're going to come back down a little bit.
Let me pose a question to you, if you will. Where you think we'd be at if Sailor had not DCA'd those coins over the last few weeks?
That's a good question.
I mean, what?
Yeah, obviously
What's
I
the
don't.
point in saying what if?
Yeah, oh yeah, it's definitely a little bit of what if, but I think we would have been fine. I think someone else would have bought them. One, but let's say like they hit the open market. Um, that could have been bad. That could have sent price down. But Sailor DCAing those assets, I think is without that we would have seen much more negative price action. And in fact, I think it's no secret that just look at Solana's chart. With that buy coming in, it really squeezed out a lot of the shorts for one, which is important because everyone was talking about that chart where, oh, this is FTX's locked assets. These are the best assets to short, right? And Solana was number one in terms of the most held by FTX. So everyone's like, okay, why not get short Solana? Well, Michael Saylor came along and threw a monkey wrench into all the Bears' plans and went ahead and OTC bought or basically DCA'd a massive purchase. So if anyone thought that those coins were just going to hit the open market and turn into sell pressure, like we've been saying, that probably wasn't going to be the case, and it wasn't. But if it were, I think we would have seen much more negative price action in Solana and actually gotten what a lot of people have been calling for, and seeing that negative price action continue. However, I think Sailor, one, squeezed out a lot of the shorts, and two, validated the long-term kind of health of Solana. So
Yeah, definitely.
Yeah.
Definitely a good take. Yeah, should we talk about ETH BTC at all, or
Yeah, sure. Yeah, I was talking about it a lot this weekend, and Nick mentioned it this morning as well in our community.
I had a trade on ETH BTC I think last week.
Yes. Do you want to start with it since you're that trade on, or you want me to pull?
You can pull it up. It's all good.
All right. So here's what we're looking at for ETH BTC. It's a daily chart. We've been talking about this kind of wedge. It's been this descending wedge. It's been forming this descending triangle. And really, we're getting near the end here, but we got a big divergence down below this lower level, and now we're seeing it kind of snap back up to this level, and I think we do see it bounce back into this range. Now, what does that mean for like the entire market as a whole? One, okay, most obviously it means that ETH is set to outperform Bitcoin, right? So if you want to take on a trade, and this is something that I'll allow CJ to talk about, ETH BTC might be the trade to take. Now, as for the altcoins, whenever we see ETH BTC rising, it typically tends to coincide with a higher beta move in the altcoins. However, this time, I'm not too sure that that would be the case because we had this big divergence of ETH to the downside. Now I think that this is just merely kind of a snapback to normalcy, and I don't think it brings the altcoins with it. So, in terms of an ETH BTC pairs trade, I think you got some nice targets set up here. I think plausibly it could even come up and hit the top of this descending wedge. That would not surprise me whatsoever, to see that sort of resilience out of ETH. But CJ, I'm curious to hear how you are trading this, given the fact that it's kind of was beat up last week, pretty bad, now showing signs of reversal. What are you seeing when you look at this chart?
Well, I just felt the sentiment was so bad last week.
Yeah, it really was.
And we really started bouncing a little bit, I think on like the 1 hour or even 15-minute chart. So I was like, why not just probe a little bit of longs in the ETH BTC pair and try to look for a little bit of continuation, because the risk to reward I thought was just somewhat asymmetric and potentially still is. And you look for edge in the crypto market, especially if you're going to trade in difficult market environments like we are right now. So I think when you can implement these pairs trades to like the correct, if you just do it the correct way, that's like sometimes where the greatest edge is in the market, in my opinion, because these types of trades have a tendency to work whether we're in a risk on or risk off environments. And like, look, you may think, I used to think I could be a good trader by just guessing whether we were going to be risk on or risk off. That works when the market only goes up in 2021. But like once you have regular and more normal oscillations of price action, it's very difficult to be right for over the long period of time guessing whether or not we're going to be in a risk on or risk off environment. So being able to have a trade that has optimal risk reward and favorable positioning that can work in multiple market environments, I think is how you can define an edge and gain an edge. So rants over.
No, absolutely. And I think that's why, it's not just ETH BTC, right? Like I really do think that could be a good trade. Like you said, it works in no matter what the market conditions are, as long as we're seeing ETH outperform Bitcoin, you're printing. And I think you could almost say a similar thing about a lot of the commodities is like they don't care about like the equity market or the um the DXY or any of that. I feel like commodities are kind of like their own independent animal, and I think we've kind of seen that in the last couple of weeks. But ETH BTC, I agree with you. I think that's a good long to take. And during market conditions like this, where we're not necessarily getting any sort of clarity in one direction or the other, uh, yeah, like those sort of pairs trades are the trades that I think offer the safest alpha in this market. So I know that's a dangerous thing to say, but that's
I don't think enough people do it.
no, they
It's
don't.
one
Definitely.
extra order, and it really is not that not too complicated. Anyways,
No.
if you don't mind, I have a couple more. I know we're going on pretty long towards the half hour today, but it's an important episode. It's Monday, lots
Yes.
going on. But I do have a couple more charts if you don't mind.
No, go for it.
So I want to talk about CL because I think today's at a really good point, because if we close down, we're kind of confirming that lower high that me and Monte like to talk about quite a bit. Also, this was really prevalent to me when we look at this. The managed money CTAs and hedge funds are the most long crude oil that they have been since basically 2018, 2019. So we're at very extreme levels. We also had news last week around Russia. I think they limited exports. They did something to lessen the supply, which should have resulted in my opinion, in a new high in oil to press forward into the upper 90s. The fact that we're not doing that, especially when CL has been really correlated to the dollar in recent weeks, I think we're starting to see a good shot at weakness here for crude oil. And especially if we have like an actual recession, or let's say the bears are actually right, crude oil is usually a really good short in panic scenarios. Also, this is another thing that just like there was a lot of selling in terms of the COT data. We didn't really go over this in terms of equities, but there was a decent amount of selling by large speculators, and that data only goes up until Tuesday to Wednesday. So I imagine there was a ton more selling on Thursday and Friday that'll be reflected in this week's report. But when we look at this, this is another interesting one, stating that the U.S. fundamental long-short hedge fund net leverage ratio saw the largest week-on-week decline since March of 2020. In other words, hedge funds are getting really, really short levels that have rivaled early 2022 as well as early 2020. So, But then again, like COT isn't, it's not giving a long signal. It's not saying that there's like massive, it's just there's a lot of conflicting signals to get a clear sign in equities here. Here's another one that's kind of interesting from a bullish perspective. When you see these blue marks, that's days, consecutive days of declines within the market. And now we've had about, we're basically nearing, the exterior of like what would be considered, I guess, a standard deviation. Like we've made what, like 7, how many red days in a row have we made? Either way, we're at the bottom portion, which is just extreme. And of course, this is the 1987 thing.
Oh,
so
here. Yeah, this had over, look at that, 716,000 views.
Yeah, at the start of the year, it was all about the 2008 schematic. But
right.
Anyways, just some charts I thought were interesting, but a lot of conflicting signals and equities. So just going to kind of remain with the existing positions. But
yeah, we're at an interesting point. Like a lot of conflicting signals, but also a lot of extremes, right? Like it feels like a lot of places are at extremes where they could see some big movement. So I feel like we're gonna need to be alert this week. Need to be ready to take some action. But man, that data is seeing those extreme levels of the hedge fund positioning is not surprising, but it gets me a little bit excited to see that sort of like extreme sort of price action, because it's typically indicative of some big moves coming. And that's really all I want is volatility.
Yeah, even if the market goes, I mean, you could still make a lot of money on these commodity trades as long as there's volatility. So
exactly.
So yeah.
Well, I think that is all we got for today. As always, thank you guys for watching. Please don't forget to hit that like button and subscribe and turn on notifications so you don't miss an episode. We're live every day, same time. And really, really appreciate your guys' participation in chat. All you guys, the usual suspects, we appreciate you. And if you haven't already done so, I don't know what you're doing, but definitely check out a 14-day free trial at tradethechain.com. You get access to the sentiment dashboard where you can see what coins are hot, what's not, what's trending. You can see if Bitcoin's volume's up. You can see a whole lot of data. It's the first thing I check every morning. And then you also get access to the community Discord where CJ, myself, Nick, Alex, and a community of traders from all around the world share their insights and a whole lot more. So definitely head over there and check that out. You kind of get first access to the insights that we talk about on this show. So thank you guys all so much for watching. Have a wonderful rest of your day. We'll see you during Trading Rebellion today at 1 p.m. Central Time. Don't miss that. That'll be with Nick. But beyond that, have a great rest of your day. Happy trading and take care.